Hey everyone, and welcome to Crypto Night, the crypto investor channel. I'm Boris. Let's dive in. I'm with Colton. Hello, Colton.
Hey Boris, welcome back to the Kryptonite channel, everyone.
All right, let's go over a little bit what the market is doing, the reaction to the Fed's decision. Let me share my screen. All right, so what we see here is Bitcoin, went all the way down to about 20,000 yesterday, and then it had a bit of a bounce, 20,300, maybe even slightly lower than that, but it stayed above 20,000. And then after the decision of raising the rate by 0.75%, 0.75%, we rallied a little bit into the evening. The stock market rallied. And since then, we can see a very clear way down. It's been on the way down. And at the moment at which we're recording this video, the stock market is not open yet, but it's already being negative, almost 2% for the Dow. The S&P is at more than 2%. NASDAQ is at like 2.6% down. So everything is falling again. The rally was very short-lived. So that's what the situation is pretty much right now, which of course it wasn't that hard to anticipate that it was not going to be a long rally. People hoped that it would have at least lasted a few days, but it doesn't seem like it's going in that direction. So you have some questions you want to go over.
Yes, I do, Boris. My first question for you is what is the Fed doing and why are they doing this in general?
How can the banks let this happen?
It's fueled by stupidity.
But that's not stupidity, that's fraud.
Tell me the difference between stupid and illegal and I'll have my wife's brother arrested.
Well, they have to tame the inflation, and they thought that 0.5%, half a percent was too little. So they decided to biff it up a little bit. They already announced that they're going to do 0.75% this time, and they'll do it again next month. But they're not 100% sure they will do it again next month. They will assess the situation. They're really being extremely careful on the evolution of everything. But that's what they're trying to do. However, they are between a rock and a hard place because they might damage the economy if they raise the rates too much. Last time they did, it was back in 1994. And when they did that, the economy didn't do very well. So badly, in fact, that they had to reverse course a few months later. So, and the other big problem for the US, but it's true for any country, when you raise the rates too much, not only you hurt your economy, but also the gigantic debts that countries have, the national debts, they actually become more expensive because obviously interest rates go up. So that means interest rates go up as well.
Okay, thank you for that. That helps me out big time. Now, my next question to you is there any way to tell, you said they might do this next month, but is there any telltale, scenario right now of what they might do next?
Well, unfortunately, there's not that much that they can do. Raising the rates is one of them. Dumping the junk bonds and not buying them anymore and trying to get them off their balance sheet, is what they are doing as well. But they don't have a million things that they can do. So the interest rates is pretty much the only thing they can do, but it's pretty much it's like taking a medicine that's not good for you, but if you don't take the medicine, you might die. So like I said, it's very, very difficult, and they have to make sure that the dosage is strong enough to stop and bring back the inflation to a lower number. But if they do too much of it, then it will damage the economy, and we'll see more and more companies having a hard time borrowing money and being able to hire more people. So, and we started seeing a lot of layoffs lately. So, especially in the crypto industry.
Yeah.
But that means these companies are just trying to get ready for more difficult times and be able to live through it.
Yeah, yes, sir. And you've also seen a lot of hiring freezes, not just people getting fired too. Tesla's on a hiring freeze, so that is pretty interesting to see. Now, what people really want to know, Boris, is with this rate hike, what does that mean for consumers and the economy?
You have any idea what you just did? You just bet against the American economy.
Well, mortgages are going to go up. So if you had a mortgage from, let's say, last year, if it was on a adjustable rate, it's going to go up tremendously. Your payments, instead of being maybe $2,000 a month, it could easily go up by 30%, or more, or 50%. Depending on how many hikes we're going to get, how high they're going to go, etc. So, you could see someone paying $2,000 a month for a mortgage, pretty soon paying $3,000 a month for a mortgage. Now, on the other side, if they don't tame the inflation, then you're going to see everything rising. We already see the prices of food at the supermarket going up, the price of gas at the gas station. Everything is going up, so it's very difficult, and companies cannot just raise employees' salaries just like that, because that will hurt them as well.
Yeah.
So it's a very difficult balance whenever you have high inflation and you're trying to fix your economy. Yeah. So it's not an easy balance, and adding all that to all that bad mix already, adding the Russia-Ukraine conflict, adding the La Nina, which is happening apparently again this year for the third year in a row, creating droughts, creating all kinds of weather problems, which of course, makes crops more difficult, to grow, and a bunch of other things happening, making the food supply again very difficult. And then, of course, the worldwide supply chain, with China shutting down and now just barely reopening, but lots of companies having a hard time finding actual parts or finding supply that they need. All those things make it extremely complicated. We're pretty much in what you would almost call a perfect storm between all of it. First quarter was pretty much in a recession. I mean, it was a negative GDP number. If we get a second GDP number, which most likely is going to happen, for the second quarter. We'll know that next month. If that number is negative, that confirms, and that really truly makes it a recession. You need 2 quarters of negative numbers.
Now, my next question to you is kind of a piggyback on the one I just asked, but what does this rate increase mean for the cryptocurrency world?
The rate increase of the Fed?
Yeah, yes, sir. What does that, mean for, what's going to happen to crypto? Do you see regulations, now for sure coming in, or, do you see, a big drop in the market?
Well, it's the thing is, everything is correlated. The stock market is correlated with the crypto market. So as we see when, yesterday the stock market rallied, then the crypto market rallied as well. Now it's coming back down, so that's going to make it fall again. Probably there's going to be more correction on the stock market, which will take down Bitcoin with it. I mean, I'm looking at a lot of different calculations. I'm not saying I'm right, and I know for sure where we're going.
Yes, sir.
But definitely, it seems like we're going further down. And we have been talking about this for already a few weeks. We have said that most likely we would go down to the $22,000 range fairly soon. And it happened actually a little sooner than we thought. And now I think that, we're probably in for a little further correction, especially when the number comes out. If next month the inflation is still a little high, if we are confirmed to be in a recession, we could easily see, another 30% drops. So that's going to take us down roughly to around 15K. And that's most likely possible that it will happen. It's probably the most likely scenario. Now, anything can happen. If tomorrow Russia and Ukraine stop their conflict, if things improve on the supply chain side, there are different things that could make things stop being so bad, and things might start looking up. What's for almost certain, there's anything for certain, but what's 90% sure is we're not going to see Bitcoin come back up, to 30, 40K for a while. I mean, it's best case scenario, we're going to stay around the 20 mark. We might drop sometimes to 19, 18K and then come back up to 20, 21K. But that's the best case scenario. The most likely scenario is we're going to drop down to around 15K.
Okay.
And a very, very unlikely scenario is we go back up to 40K or 35K. That's in the near future, for the next, let's say, quarter, like next 3 months.
Yeah. Okay. My last question for you today, Boris, is, should I and the Kryptonite subscribers sell, or should we be huddling right now? What do you suggest?
It's 2 minutes to close, Gordon. What do you want to do? Decide. Dump it.
If you need the money, you can sell. I don't think it's ever a good idea to sell at a low point like 21,000 right now. The best is usually to hodl, but everybody's situation might be different. But if you don't need the money or anything, selling might not be the best solution. If you think like, but if I sell at 21 and I buy back at 15, I could buy more. That's true, but we're not guaranteed to go down to 15. What if it barely drops to, let's say, 19, and you wait for 15 and 15 never comes, and then 3-4 months from now things start improving and we go back to 25 and eventually 30? You're going to be buying back in at 30 and you're going to be like, man, I sold at 21. That was really bad. So if you had sold at 60, 50, even 40, and we were looking at the possibility of going down, there was some room to sell, and buy a lot more. And that would have been maybe a good move, which also reminds everybody to take some profit, especially when you've made, 5X or more, to start taking some profit along the way, not to sell everything, but to take some profit as prices go up. But selling on the way down, when we are pretty much all the way down to 21, there's not that much anymore to be. I mean, obviously we could go down to 10, and then obviously someone would have said, you should have sold at 21, you would have doubled. Yeah, but you had no guarantee it was going to 10. You don't know. No one knows. So look at Wall Street. They were almost certain that this month's number for inflation was going to be around 8.1, and it was 8.6. So they were completely wrong. So there's never a way of being sure. But right now, it's probably the best is to hodl. and see what's going on. Now, if you're thinking about buying because you have some cash on the side and you're wanting to buy more, given the whole situation and the high chances of numbers going lower, you can start buying now, but I don't think it's necessarily the best way of doing it. But as soon as we cross under 20 and we get into the 19, 18 range, you can start DCAing slowly. I would take my time. Anyway, there are high chances that we're going to stay down for at least a few weeks. It would take some dramatic events for us to go right back up. Like if suddenly inflation is at 4 and then the next day Russia says, okay, we're out of the Ukraine, and supply chain, China says, yeah, everything is good to go. We have tons of stuff to deliver everywhere. I mean, it would take way too many good news, for major bounce back that are very unlikely. So you want to bet on what's most possible, not on what's almost improbable. So that's why waiting, and then, but don't wait too long either. That's why DCA, you have to DCA, because no one will ever know where the bottom is. No one will ever time it perfectly. But once we passed under the 20 and we're start entering the 19 and eventually the 18K, those are good numbers to start DCAing. Another thing is there is very strong support at 20, so it might be hard to break under 20, 19. You can see a small variation, but that doesn't mean we're breaking really 20. If you see 19,500, we're slightly under 20, but you can have a bounce back right there to 21 in just a few hours. But if we break below, let's say 19, after that, there's not a whole lot of support all the way down to about around 15, 14,000. So like we saw, we went very, very fast down from 29 to 21,000. We could see if we break 19, we could see numbers drop very fast as well. We could see a major drop, but it's all correlated. So watch out the stock market as well. I think the stock market can give you a good indicator of, what's the direction of the day.
From my side, Boris, I appreciate all the information, but that's all the questions I have for today. But that's it for today. Yes, sir.
And, everyone stay cool out there. Try to take it slowly. Don't worry. We've seen that, many, many times. And people still need to realize 21 is still a pretty good number. 2019, so that was 3 years ago. In May, June 2019, Bitcoin was at 3,800, something like that. So we're still, 6-7 times higher than we were 3 years ago. And even if we drop to 15, we're still way up, and eventually it will rebound. And it will go much, much higher, but that will be more and start happening maybe at the end of the year and really 2023, 2024, and maybe 2025. So it's going to take some years for you to make some solid, good returns. But every time, if you take about 4 years, you go back 4 years on any chart of Bitcoin, you see that you would be pretty much winning. No matter pretty much where you bought, you're gonna be winning. But it's just a matter of time. So just wanted that people don't get desperate out there or get completely demoralized. And it's gonna get better. But we probably have a little bit more pain, to go through before we see a real bounce back. That's it for today. Thank you, everyone. Thank you for watching. And thank you, Colton. And we'll see you all on the next episode of Kryptonite. I hope this video helps. Thank you for watching. Have a good day. If you haven't already, please subscribe to our channel, and if you like the video at the end, click on the thumbs up.